Good morning, everybody. Welcome to the Flow Show. It's now officially winter. Now the clocks have gone backwards. It's all dark in the evenings and cold and horrible and everything else. So, yeah, winter is coming. Anyway, hope you're doing all right. Morning, Kate.
Morning, Ryan. Morning, everybody. Yep, all good. Had a little bit of a long weekend, coming back to markets and all ready to go and rock and roll.
Yep, all ready to go. Ali, the Flow Show's been running for coming up for 3 years now. It's at 10:30 UK time, every day, all day, irrespective of clock changes. Okay, so there's no excuse why you don't get the time right for the Flow Show. 10:30 UK time every single day of the year, always. Okay, so hopefully that will be the last time I have to say that, because I'm not saying it again in March when the clock changes again. Okay, I know the tweet went out a bit earlier. That's to do with the back end and whatever systems we use to automate our tweets. But the Flow Show goes out at 10:30 UK time every single day. Right, let's go on. Well, before we do, I was going to mention that we've still got our sale on, 30% off our trader funding program plans, all plans. That's instant funding and assessment programs plans. So you can get 30% off any of those. Only a few more days to go. November the 2nd at midnight, that goes off. So this is your last chance to get it. I've just put the link in the Zoom chat there. Right, let's go. Get me notes back up. Going to start off with the PBOC, who fixed their rate down into the 708s now. So they are just letting it go a little bit. We were fixing 711s, 712s for a while. Then they got dropped down 710s and 79s. Now we're in the 78s. So it does seem like they're willing to let it go just a little bit, keeping it slow and steady, but they are moving it again. China's Premier says that they're ready to build a more stable and strategic partnership with Australia. PBOC Governor Pan says he's going to resume, or they're going to resume government bond trading in the market, and they're going to implement loose monetary policy. So we are still potentially heading for a rate cut, and there's signs from the PBOC that's the way they're going to be going. Over in Japan, we had PPI, which is called Corporate Services Price Index. That showed a jump to 3%. Was expected to go up to 2.8% from 2.7%. So again, a nice, healthy jump in inflation, or some inflation there. As you see there, China's industrial profits, there's a bit of data out as well, were up 3.2%. So another good month for those guys, if you can believe the numbers there. Moody's, they've just affirmed Japan's rating. So they kept the rating as is, and the outlook is stable. RBA Governor Bullock was speaking earlier on in the European session, says that the RBA's rate might not come down as far as others. So still sitting on the bullish or hawkish side of things. Says unemployment could come down again next month. That was following the jump we saw at the last data. Then talking about inflation, says that if you ended up with a core inflation print of 0.9%, that would be a material miss. We're getting quarterly core inflation data on Wednesday. The market is looking for a rise of 0.8% of the quarter, but the central bank itself was forecasting it closer to 0.6%. So that would be a potential hawkish move or slant from the RBA. Oh, excuse me. Let's get rid of that. There would be a potential hawkish slant from the RBA if that inflation comes in hotter than expected. I don't think we're talking hikes or anything, Kay, but certainly means they'll keep sitting on their hands a bit longer.
Yeah, of course, he was rather hawkish again after maybe a little bit of more balanced comments on the off late. She's back to her hawkish self. Was she talking about the core CPI on that stuff? Because I thought that the CPI headline was expected, is expected to come in around 1.1 quarter on quarter, and I thought she meant that one, but maybe it's the Korea, and I misunderstood. Yeah. Anyway, she's still pretty hawkish, and looks as if the market is listening to her. I mean, Aussie was already a bit supported, but she did add the 15-20 pips to it.
Yeah. Well, I've just looked back here. It did say, well, it's been reported it said the core. So I think that's what you were talking about. But yeah. What was the gap up all about in the Aussie, or was that just this chart and not the
I
others?
think it's that China comment, and then well, the market has been a bit yo-yoing, wondering whether the relationship that the US wanted to increase with Australia, uh, um, closing the gap on rare earth supply, was first seen as positive, and then it was scrambled back a bit and then negative. But now it seems that Australia is being soft-eyed by both of them, the US and China. So I guess that's where we saw that little jump coming out of the weekend.
Cool. Thank you. Right, over in France, politics is still going over there. There was supposed to be a vote on parts of this budget crap that's been going on for forever. That got delayed. The socialists are still trying to push for a vote on a wealth tax, and if they don't get that, they're still threatening to bring the government down. That's continuing today, I think, through today. So there might be news for that. Moody's also were rating France. This is on Friday. They kept their rating where others have been cutting, but they downgraded their outlook to negative for France. So might get a rate cut from them if they don't get this budget passed and things blow up as well. UK Chancellor Reeves pretty much confirming that she's looking at both tax and spending to keep to her fiscal rules. That's raising taxes and lowering spending, which is still not going around, still not going to go down well. Just for those who are not in the UK, some of her plans or latest plans that she's floating around are what's being called a mansion tax, which would be a tax on about 1% on homes above worth over 2 million quid. Proportionately how much it's valued above that, and this will be an annual tax. So this isn't just a one-off tax. This will be an annual tax, which has gone down like an absolute lead balloon here in the UK. But again, that's one of the things she's floating at the moment. We'll see whether that happens or not. The other thing she's doing is blaming Brexit for a lot of the reasons why she's going to have to do what she needs to do, which is, of course, complete horseshit, pulling Brexit out the hat. Again, absolutely no evidence behind it that she's presented. Well, evidence that you believe anyway. So things aren't going too well at the moment in terms of how people are viewing this upcoming budget. We've still got just about a month to go until we get it, but we keep getting all these plans floated around. Back to the data, Germany IFO was looking for a little bit more optimism, given what we saw from the PMIs. We did get positive numbers. Business climate itself went up a massive 3 pips above expectations, 88.4 versus a prior 87.7. Current conditions, though, were crappier, falling to 85.3, but those expectations picked up to 91.6. From 89.8, which was also revised up. So a modicum of improvement there in those numbers, but perhaps not reflecting what we've seen, the positivity in the PMIs anyway. Going back to data from last week, we got that CPI data, and the market decided it wanted to trade all around it. Overall, it was mixed. CPI went up as expected to 3%, but not as much as the 3.1 expected. The core was expected to come in unchanged at 3.1. It actually dropped to 3%. So we got both metrics now on 3%, one up, one down. The market seemed to take the dovish side of things for that, and read it as took the core number over the other number going up. We also had the 3-digit super core, which fell to 3.176 year on year from 3.211%. So a lot of red in the numbers there. So then that, as I say, that's what the market took as dovish. On Friday, we saw the dollar getting sold off. That didn't last too long, though, and then we saw a bit of reversal once again. So the market going one way over the data, jumping on it to trade it, and then going completely the opposite direction. No change to what's happening at the Fed whatsoever. That data isn't likely to change their decision for further rate cuts, one of which should be coming this week. The White House confirmed or said it's likely there won't be an inflation report release next month, because remember, this was just a one-off that they needed to use for some social security revisions for what they're going to be paying next year. We also got the S&P Global PMIs, which saw both numbers, services and manufacturing, gaining. Manufacturing went up to small pips to 52.2, was expected to dip to 51.9. Services as well, a nice healthy jump to 55.2 from 53.5 expected. So again, that was expected to go backwards. Michigan numbers, these were the final numbers, and a little bit softer than their flash readings, although the 5-year inflation number jumped to 3.9% from 3.7%. We did get some of the regional central banks or regional Fed banks issuing their latest GDP guesses. The St. Louis Fed had their real GDP nowcast for Q3 coming in at 5 decimal places, 0.5941. That was up from a 0.42455 a week or two ago. The New York Fed had their annual number for Q3 coming in at 2.35 versus 2.34 previously. So still seeing positive numbers, or in their guessing games anyway, for the economy. A Reuters poll, 23 of 39. Oh, I can't even read my own writing. 23 of 34 economists say that the BOC will cut their rate this Wednesday to 2.25%, with the rest saying that they are going to stay on hold. We'll see whether trade is going to come into the BOC's thinking. Trump saying that Canada cheated and got caught, and they can't take advantage of the US any longer. He continues to accuse Canada of trying to influence the Supreme Court. He also decided to slap tariffs, 10% tariffs on Canada in response to that advert they put out. Trump will notify Canada when those tariffs take effect. He was also speaking about China. Says nothing agreed yet on China, but he feels good. White House's Hassett says he expects Trump to talk to Canada again by the end of term. I don't know what term he's talking about. He says a timeout is the right call when you're frustrated. He also called the inflation numbers fantastic. Don't ask me why. I didn't really do anything. Canada PM Carney says we stand ready to pick up on progress when the US is ready. We cannot control the trade policy of America. We recognise US policy has changed. Says Canadian officials have been working on negotiations on trade. Says a lot of progress has been made, but we can focus on new partnerships, including with Asia. There was rumours that President Trump is going to meet Carney in Asia this week. A lot of people getting together for this shindig. But Trump says he won't be meeting with Carney for a while. White House official says a Trump-Xi meeting will take place at this summit thing. Trump says he's also going to go to China in the early part of next year. So that's one thing we're going to have to focus on this week, as well as all the central banks that we've got, is this meeting over in Asia and that Trump-Xi meeting. There has been headlines as well that they're going to look, or Trump's going to look at the TikTok deal and see what's going to be going on with that. Aside from that, little bit quiet on the headline front. Kay, anything else you got?
Oh, nothing pressing. Seems like Besant has narrowed down the list of Fed chair candidates. Five left, if I'm reading that correctly. Waller, Walsh, Hassett, Bowman, and Reader.
Yeah,
I guess.
it's the same five he whittled down last time. We were expecting him to
Yeah.
take it down further, but he hasn't, obviously.
Yeah. Okay. So nothing changed over there. Now for the rest, I think we covered everything. It's going to be going crescendo this week, right? Tomorrow. Well, that's what Takeichi said that she will meet Trump tomorrow in Japan still, although the APEC starts tomorrow as well. The program starts tomorrow. But yeah, probably Trump and Xi will arrive only maybe on the 29th or so. So yeah, we're going to have central banks and then that APEC. This is probably going to be the two main events of the week. Well, the central banks are several events, but we can take them basically as what is it? What shall we say? Two. Um, Canada perhaps moving, US moving, and then ECB and Bank of Japan unchanged.
Yeah, I think so. Sounds about right. So we go. Let's have a look because obviously these calendars still put up the US data that we got going on, even though it's not happening. So today we were supposed to be getting durable goods. That's not going to happen. We will get Dallas Fed because that's a regional bank stuff, and then tomorrow we will get the Case-Shiller Home Price Index and the FHFA because they're private data, but we won't be getting the Conference Board Consumer Confidence number for that. Wednesday is that CPI data from Australia, so that's going to be pretty important after what Bullock has just said. And then it's Bank of Canada with that expected rate cut to drop. It's also monetary policy reports, i.e. updated forecasts and whatnot. So we'll be getting, we have to listen to Stephen Rogers giving us the lowdown. Pending home sales. I'm not sure if we're getting that one. I'll check it out. Not everyone's going to be that bothered about it. I'll see if it's official data or run by the NAR. And then it's FOMC, where we are expecting another rate cut. Do you think there's any danger of them staying on hold with a lack of data?
No, I don't think so. I think rate cut is now pretty much a done thing. Well, I think anyway. The only uncertainty for what I'm concerned is to see whether Powell and friends announce the end of QT now or giving a hint at December or not giving a hint at all. That's probably the biggest uncertainty. They're probably going to leave everything wide open for the December meeting. So I'm not expecting, at least not Powell, not expecting him. We will see in the minutes then afterwards, but not expecting him to give a firm hint at a December cut, which the market is pricing in now. He's probably going to continue to err on the cautious side, but yeah, the announcement to end QT may be there as well.
Yeah, thanks. He might give us some tidbits of what data points they're watching. He likes to do that now and again, so give us something to focus on. Yeah. If he says they're watching something in particular to monitor the economy, I think any lines on jobs is going to be important because obviously they haven't had the NFPs or anything for a while, so they might be looking at other surveys and whatnot. Then on Thursday, Bank of Japan, that's coming out. I've got to ask, is that the right time? Because usually it drops on a Friday morning for that one, that BOJK. Is that right? Or is this one of those calendar quirks that we usually get?
I think it is slated for the 30th. So I have it on the calendar that came out like early in the year, and it is already put there for the 30th. And all calendars are reporting it for the 30th. So I guess it's on the 30th.
Yeah, so I'll keep an eye on that. And then we start getting some Q3 GDP numbers coming through from Europe. So it'll be interesting to see how much of a bounce, if any, we've seen in the third quarter. And then we'll see what's likely to happen in Q4. So that's coming from Europe as well. We won't get the GDP number, I don't think, from the US. So that'll be guessing games for that. We also get, I think we get the regional CPI numbers coming from Germany as well. And I don't think this calendar has updated its clock as well. So I have to go and fix that too. So these times have changed a little bit. And then we get the ECB coming out, which should be a pretty much a boring one. They've got absolutely no reason to shift tone on policy. They are all happy. Well, the majority of them are all happy with where rates are, with where inflation is. So I'm not expecting any boat rocking from this one. It will just be how flat things are, or how comfortable things are for Lagarde, and whether there has been any material risks changed in the meantime. You expect anything for this one, Kate?
Zippity-doo. Lagarde was more busy with seemingly helping other European countries how they are going to use frozen Russian funds of late than about monetary policy. So she's been repeating 10 times that she's happy where everything is, and everybody is happy, even if Villeroy is always a bit the hawk, the dove, sorry. His dove itself in there. I mean, everybody's happy where things are at, and not expecting anything at all from the ECB.
No, absolutely. So nothing from those guys, but you know, we have to go through the mill just to make sure the market will do the same thing. Friday we get more flash CPI numbers from Europe, so that'll be a little bit of a test for whatever the ECB have said, just in case there's any wild variations in that. We won't get PCE from the US, so that's off the table, as are the rest of the stuffs there, apart from the Chicago PMI, which we'll get on Friday. That'll be about the only thing we do get out the US. So, Kay, we've got a big week of central banks, but not really much expectation for any of them.
No, what is it? Canada may surprise if they don't go. For the rest, I don't see many surprises coming. It's so widely expected, and already sent a few messages out that the Bank of Japan is going to wait. Ueda may still continue to say that they are on their way too, and I think that the market may, but I've been saying that already a number of times, maybe underpricing the possibility for December, but yeah, this month nothing expected. Yeah, ECB, as we already mentioned. As I said, the only real surprise to me, maybe perhaps Canada, but knowing McClem, is he going to listen to Rogers and hold their hand still right now, or just another one of those we don't know what to happen cuts, and because our models are telling us that things are not going too well, and with this renewed threat of an increase in tariffs, maybe they find it necessary to preemptively continue to support the economy if they judge it needed.
Yeah. Dimmy, no, there won't be durable goods today. That's government data. I'm not sure if this calendar shows who it's from. Nope. But no durable goods. I'll show you it on this one, if you like. Where are we? Durable goods, if it's even got it on there. So this calendar usually tells you it's for, so the Census Bureau. So that's government. So that won't be happening, that data. So if you've got this calendar, click on the data points, it will tell you who runs it. So I can actually check that pending home sales. Here we go. Let's have a look at that. Oh, not that one, idiot. Oh, I'll have to check it. I haven't even got the date up. But yeah, if you click on any of those numbers, it tells you who's reporting it. And then you can see whether it's on or off. Right, let's have a look at what's going on. We're on the Aussie, a little bit of a break up. It was sitting in this really tight range, 65 10 20s, 64 80s, and we had those dips down to 64 40s, which will proved really, really solid. We've broken back up through this zone, so things are looking like changing around. Kay, what sort of levels are we looking at if this downtrend is really going to turn around? It's probably not until we get to 66.20 odds.
Yeah, I've got a bit of a double action around 65.75. And then it's 65.05, 65, yeah, that upper one there. Maybe just below that 66.35 line. You see that 1, 2, 3, 4, 5 tops, just around 20.30, right? Just there. That's going to be the big one if we get up there. I'm a little long, but as usual, been slicing a bit. Looking much better, I must say, because we're coming out of that period of real uncertainty. And yeah, well, I mean, it's easy, relatively easy now. 60 65, 20, 25. If you don't hold it, we're back into trading something much more miserable. But I mean, if we look at all those moves and you go through different crosses or pairs, I mean, take away yen, which has been weakening quite significantly over the past weeks. Take the rest. I mean, we're talking about, okay, you mean 60 points in 60, 65 pips in the Aussie is 1%. Okay, it's a move, but you're not talking about trends being built here, right? Euro dollar, very difficult to see which side we're going to break out. Cable up and down with the euro sterling, not knowing where we're really at. I just hope that towards the end of this week, with all those people meeting and the central banks and etc., some people in the market will pick a side, because it's very hard to know right now in FX. I mean, as I said, take away the, and it's hard to know which way it's really going to move next, because yeah, we can have a bit of fun inside ranges, etc., but really we are going to need this thing to pick a side. It's like we've had actually the summer we're seeing the summer lull with some delay. Um, because we had moves in August, etc. So early September, July, August was quite. They were moving. The markets were moving. So it seems that we have a delayed summer lull ongoing there, because we are still very much in ranges, right?
Yeah, I mean it is to be expected. I mean, we said pretty much the first day back in September. September is going to be the month that sets all the central banks for the months ahead, and it's done that. The market, there's nothing to trade on the ECB. There's nothing to trade on the Fed unless the data starts meaningfully changing the landscape, which will cause the central banks to change. And this is, the market. 90% of what the market trades is central bank expectations, and it's got nothing to trade at the moment. So it's just going to get dragged around by politics and all the other crap going on in the world.
Yeah. But Ali is asking about shutdowns and economic data. The problem is with economic data, we're having so few of them out of the US, which is the biggest market, that is still a hard trade. Now we can always say, like, okay, the longer the shutdown lasts, the more expectations are that it's going to weigh in some form or another on the economy. But it's all a very slow process, right? And um, the rest of the economic data, even the CPI on Friday. I mean, what did you get? 40, 50 points range in the euro dollar? That's nothing, right?
No, not a lot. Not a lot at
No,
all.
it's not. It's really not a lot. We need a catalyst somewhere to, and maybe those talks between Trump and G are going to provide a catalyst if they get anything more than I'm buying soybeans for you, and the other side says, okay, we don't slap those tariffs, and we are going to reopen your market a little bit for whatever products there is between the US and China. But then it's still not going to be a big breakthrough, right? Confirming a TikTok deal. I mean, what's it going to help us? Nothing, right? Nothing.
No, absolutely right. And one thing that isn't good news is volatility is coming down as
Yeah,
well.
absolutely.
Yeah, we've got. I'll
Oh,
show you.
I was looking at that this morning, and it's a bit it's a bit depressing when expecting, when hoping for moves. Yeah.
Yeah, we got euro dollar under 6% now, down there 5.5%. That's not good for vol. 6 to 7 is sort of your pivot line for when things are quiet and when things are getting more volatile. Cable as well, below 7%. Dollar yen coming down a bit as well. So it's not looking good on the vol front, but it means you've got to take the opportunities like when we got CPI data to try and make some money out of it. And you can get this vol widget, option widget on our dashboard. If you go into market info and live options pricing, you get all the stuff there. Right, so let's have a look at what else is going on. So we're there on euro dollar. It's been keeping this uptrend since that test again at the 115.70s last week, but it's all pretty slow going. We're trying to get and hold above this 116.30s level, which is just an intermediate level we've messed around, and we're going to mess around with all these little levels all the way back up. Unless we're getting back into 117 and getting back above that level there, 117.45.50, a bit of a biggie. Then we're just remaining in this sideways action going on. It's still holding the downtrend here, but this test after these lows could be pretty important. We might start to be breaking this downtrend, but it remains to be seen what we do on the upside from here. Ellie, you're looking at dollar CAD. I think this one just it's been looking bearish for the last few days, purely because we had that test last Tuesday up towards those highs, couldn't get out there, and it crapped out pretty quickly as well after that. And then we started seeing this 30 zone level holding again. Then we were getting the dips down to my support level, the bounces, again, failures there. So I think this is just a bit of the clock running out, buyers thinking we ain't going up, so getting out of town. We are back down messing with this level. We've had a bit more of a break down here at this 78 level. It's not flushing through with any sort of volatility, so it's not completely breaking. But even if we do hold below this area and move down, there's a lot of traffic in the way down here. So I don't know what it's going to take to get this moving back up again.
Bank of Canada.
Yeah, it could be. Well,
the Bank of Canada comes up with a bit of a surprise on the one on the other side, maybe.
Yeah, could be. Again, this move here could just be a bit of risk coming off the table ahead of the Bank of Canada. But if they do surprise and stay on hold, that will be a bit of a shock. I would not be surprised if we're down at 139s, maybe even more than that, because that will be a real shock. So if you're looking at where to catch knives on this one, 139s around that 50 from here would be a reasonable area, if not down to 138.66, which was another pretty significant level. It's also the 61.8. So these fibs are matching up against some big levels that are already in play. So if you get a dip on this one, Kay, would you be interested?
Yeah, but am I? No. I mean, really, it's going to have to tell me what we are going to do in that traffic zone, and that is probably going to be where do you have it? Let me quickly look on mine as well. Yeah, just it's going to be well below 139.5, probably towards 139, the figure also.
Yeah, that's going to be a
There,
level, but
there, yeah.
But I think if depending on where we are, obviously, but if they don't cut, I think we'd do better than 139, because that dollar CAD can pull out a move, 100, 150 pips on big surprises like that. So yeah, I'll be a little bit. 75 pips is probably a bit too close for comfort for 139, but
yeah, but then you have a bit of a 138.65 below there, which is also going to be a decent level. Yeah, maybe. Well,
yeah.
I have to see first, because the problem is also as we advance in the week, we are going to run into that APEC. We are going to run into month end, maybe and then the Bank of Canada, and it's all going to come together a little bit, right? So this is one where I would very happily let the move happen and then see if I need to get into it or not.
Yeah, no, I can agree with that. I can agree with that. It's either going to be the perfect storm or the perfect shit show.
Yeah.
We'll have to wait and see. Right, moving on. Euro sterling. We had a decent close on Friday, right up above this 87.2025 mess that we've been faffing around with for so long. It's holding it at the moment, though it has eased off a little bit. So it's trying to keep its gains. We couldn't quite get up to test these 50s highs, though we got close as damn it, matching some of these prior little highs that we had here. So it's still looking positive. The fact, Kay, that we haven't really seen it push on that much is perhaps a worry. But again, it just shows a lack of volatility, really, that the market's not really willing to push this anywhere major.
Yeah, exactly. Which are just sitting on the next level. And the vol in euro sterling is so low. Reeves is trying to not give the market too much, or well, I mean, maybe she's not looking at the market, but to not give the public too much of a negative look on stuff. But I think sooner or later it's going to come back to bite. So the problem with euro sterling is that you pay to be long,
Yeah,
and the longer you sit in a position, maybe those longer term players are not really part of this because it doesn't have enough volatility, and the shorter term ones they buy, goes up 20-30 points, take a fair bit of the profit, and then leave the boat again, and that's why you see those very tight ranges. But I do think maybe the range will just gradually shift higher the closer we get to the budget, right? And that's what I'm still thinking. Yeah, still a bit long and patient now on this one. Let's see if funding is everything or not in the meantime.
yeah,
But yeah, I think the direction it's okay. Because there's not too much, even if the growth is anemic and we are not really seeing a lot of positives in Europe. It's not deteriorating anymore, and it's okay. I think that in the euro and Europe for now are those kind of at a low level, but okay. It's not deteriorating anymore.
yeah, yeah. Right, I'm going to pass it over to you,
Yeah,
mate.
just a couple of quick ones.
While I'm doing that, Mark's asking, does anyone know how the data will be released when the shutdown finishes, all in one day? No, they're not going to. This is government, okay? They're not going to come back to work and have all the data knocked up in a couple of hours. It's probably going to take them quite a while to pick up where they left off. So it probably a bit of a job. Stuff will be delayed, and we'll have to wait and see when it all comes out. All yours,
Right.
mate.
Brian asking about cable as usual. I've already said it on the morning and on the morning updates, mate. I think this 133.30.35 is a little bit of the turntable for what's happened over the past sessions. So really, we'll have to look at 133.60.65 to see if we can get back above for a move back up to 133.90, where there was also interest prior and where we have a bit of a trend line coming in. Those are going to be your levels to the top side. If we can't hold above this 133.30.35, then we're looking at 133.10 and then that 132.95.85 again. But we really will need to break outside of one of those two to start with to get going again. Okay. For the rest, yeah, you can continue to trade it a little bit from the softish side because it does look a bit soft, and regularly euro sterling comes back a bit. Like for instance, now we were trading around 20, we're back 26 bits. So I mean that's going to maybe weigh a bit on the cable. But really we need to break those ranges. Where it's going to be getting interesting, I think now this week, is gold and silver. Um, we've been hitting our head against this 41, 10, 30, 60 zone since we came back down, gradually coming lower. And now with these positive vibes that we Besant managed to create surrounding the Trump Xi meeting, even if it could end up being somewhat of a damn squid in the end, I think there's a chance or a risk for those looking at it, that we are going to have a look back at the lower end here and maybe even have a look below 4,000, getting a look at this 39.45. This trend line here being broken, I don't think it is as significant as it would have been if it were here or here, for instance, because now the trend line really has come to market instead of the market coming to the trend line. So this one I think is going to get watered down. Played its role for a while, but now I think we just need to look at really prices and actually US coming in. They are giving it a hit on a knock on the head there. Gold. We're trading at 40 and a quarter. Once we're out of, once we will know what's coming out of those meetings, then we will be able to make a better decision. If it's only going to be all around about TikTok. And yes, I'm not going to slap 100% tariffs on China. And China says, yes, I'm going to buy another ton or two of soybeans from you. I think sooner or later, but I don't know when or where. Sooner or later, it's going to bottom out again, and we are going to try and find a base again, if it's only that, okay? But in the meantime, I think there's a bit of a risk that we are going to have a look at the lower end of what we have been trading, and actually potentially down to 39 and a half or so. I'm not sure if we can get lower down into the 38s, but this is now, it looks as if we are going to find maybe a little bit of a lower low here compared to what we have seen. That's how it feels. Silver is looking same. A bit dead cattish bounces. The bounces are getting less and less impressive here. Even a bit of a small trend line forming, perhaps, which with the top end, a bit of a resistance around 48, 30, 40. But it looks as if, and we are actually trying it right now, we could go below this 47 and a half. You see here the 38.2, and then we may be talking about 45 and a half, 46. That's what I've put on my updates as well. You see those two prior lows here, three actually went through it, support, went through it, support, went through it, support. That's happening around 46 bucks. It is possible that we are going to go there before reassessing, okay? But then it's going to, in my opinion at least, needing a bit of reassessment. I'm short term on both. I think there is a risk for both of them to continue a little bit lower, but medium term, longer term, I'm by no means a bear yet, okay? So there's a big difference between what can happen on the short term and what could happen on the more medium term, okay? Um, Sterling Aussie, I haven't been watching it again of late. It should be under pressure, right? Fred, is if you look at what's happening in both, it should be under pressure, right? Well, it's not the right one. Did I have this one? Which one did I have? I know I've put some lines on one or the other one, but I don't recall which one, to be honest. No, but it's looking as if we could go for a little run down to 202. That's possible. 202 looks feasible here for me. That would be back to trend line support. That is, of course, if sterling continues to behave on the weaker side as well. I think Aussie looking a bit better. This looks like 202, 202.5. Ryan is long Euro Swiss, Addy. I'm not. I don't have anything in the Euro Swiss. I'm rather a bit long Aussie right now, and I've got a bit of other stuff running. Still a bit long Euro Yen. I think on the Euro Yen we are holding, and we are now trying to break above that prior 177.80, 90 again that we saw earlier in October. And I still think we are in the longer term going to push for somewhere around 179.5, maybe 180 before this reverses. For as long as we are above this prior 175.40 high, I think we could continue to push on this one. This is still one that I'm running for now. Ryan, I'm looking at the clock. Back over to you, mate.
Yeah, thank you very much, mate. Yes, Ali, I am still long. I've just taken a little bit off 67. Still going the same way. Pending home sales, that's an National Association of Realtors, so that will be coming on Wednesday, but nothing for anywhere else. That's it. Thank you very much, and welcome to any Yanks who are here. You've got a week to watch us before your clocks change, so if you're jumping in, we welcome you to the Flow Show for a week at least.
And the week after, you just wake up an hour early.
Exactly. You get an extra hour in bed, just like we've had this weekend. So, yeah, enjoy it while it lasts. Anyway, thank you very much, everybody. Have a great day, have a great week, and we'll see you all tomorrow.